Good day, traders. This is the daily market rundown live from the Tradelo Trading floor. It's October the 21st, and some highlights from today's show. German PPI, big miss. Trump is trumping Kamala, and Euro Swiss is primed for a drop. Good day, traders. Let's start with some of the overnight news. Of course, over the weekend, we had the attempted assassination of Israeli PM Netanyahu, and effectively it was blamed on Iran. Iran has pretty much come out and said it wasn't them. In reality, there were some meetings that took place with the Israeli sort of key individuals to discuss the strike on Iran. Now, we don't actually know what was discussed there. We just know that right now, as of today, the market's thinking is that any kind of strike will ultimately be very limited. It will not target any nuclear facilities as well as oil refineries. And as such, the premium priced into oil in terms of a risk premium is very, very limited. Okay, sure, we'll talk a little bit about this in a minute, but the oil price is up 2% on the day, but it's well below that $72 a barrel, which we regarded as very, very key support that the market lost last week. So right now, it's kind of a case of the market doesn't really care about it too much, but of course that can change. We're still waiting for that strike from Israel, and until we get that, we just need to be a little bit more patient. Now, let's go across and talk about the ECB. They've effectively come out, and ECB Simkus, he's not one of the key governors, but he has come out and he's opened this door, this idea to the idea that the ECB could actually go below neutral. Now, this is important, not because necessarily his sort of viewpoint matters that much, but ultimately he's the first governor to talk about going below the neutral. Okay, it was only 7 weeks ago that Lagarde told us they're going to cut at every other meeting and they need to be very patient with cuts. Now the market's opened the door to the idea of a 50 basis point cut in December. There's some pricing of that. Whilst the probability is still low, there is some pricing. And now suddenly we get Simkus telling us that in actual fact they may need to go below should disinflation become a little bit entrenched. So that's quite fascinating and definitely something to keep a very, very close eye on. Now, one of the other things to pay attention to, of course, was this morning we had German PPI come out, and that was quite a significant miss. It came out pretty much as 1% it came out as 1.4 negative percent year over year versus an expectation of minus 1%. So quite a big dramatic drop in the PPI versus what was expected. Now, negative prints haven't necessarily been shocking for the market, but it's the degree of these misses that are now starting to create some concern. Why? Well, because PPI is a direct component into CPI. All right. At the end of the day, don't forget, Germany is the key manufacturing industrial hub of Europe, and the fact that we keep seeing these negative prints to the downside does really concern a lot of economists, and it is going to filter into lower CPI prints for Germany and, of course, for Europe as a direct result. So keep a very close eye on the implications for that. We should see, or we have already seen, the German curve, a little bit of steepening this morning. And that's just a follow-on from what we saw after last week's ECB meeting, which is this idea that Germany's perhaps slowing a lot quicker than expected, and the ECB will need to start front-loading. Otherwise, they are going to push themselves into a situation where they'll need to cut a lot faster than they want to. Okay, let's then move on and talk about some of our key charts. The first one to take and pay attention to is this 5-year break-evens, for the simple reason that break-evens is something the ECB has very much referenced in the past. I remember when I started trading back in 2014. Well, I started in 2011, but in 2014, Draghi explicitly referenced the break-even chart as something they look at in determining the medium-term expectations of inflation. And what you can see sort of at this vertical line, that was pretty much the point where ECB's Draghi came out, or the ECB confirmed that they were going to begin the process of quantitative easing via LTROs, and then obviously they did the LTRO 1, 2, they did QE Unlimited ultimately, but ultimately they very much started an aggressive dovish policy once those break-evens got below that red line, once that got below the 2%. Okay, and you can see, of course, even with all that policy well into 2015, it just wasn't enough. Okay, the ECB was very much behind the curve, and they stayed behind the curve, as you can see, pretty much for everything up until the COVID years. Okay, now the Simcus article is very interesting in a sense that you can see it's come at a time where break-evens are very, very, sort of contained. They've come off a significant amount over the course of last year and this year, and they're very much hovering in and around that 2% mark. Now, don't forget, we were trading just above 2% prior to the Fed cutting 50, and it does look as though this is starting to move back down towards that 2%. Now, don't be surprised to see the ECB turn up the volume on a 50 basis point cut in December should this break even get back to that 2%. Okay, they are not going to hang around and wait to see that break even back below 2% because then they are behind the curve and they're likely to then have to act with more forceful rate cuts in the coming months. Okay, so keep a very close eye on this chart. It's quite a fascinating one to watch. Now, we turn our attention to US elections. We're not that far away. We've got 2 weeks to go to US election day ultimately. And it's very much looking like the market just absolutely is confident on a Trump victory. And we can see that in the odds via Polymarket. Now, sure, we've got to be careful because these markets are not exactly that liquid. They are relatively easy to manipulate in terms of how much volume is involved in them, but there are some big investors that are referencing this, so we can lean on this as just a very good idea of sentiment with regards to the US election. Now, as of the start of last week, I think Trump was around 54%, and that shot up all the way to around 61%. He is polling very, very well at the moment, and no doubt his little McDonald's stint over the weekend very much gives him just a further boost in terms of the odds. Now, that in its own is one thing. What does that mean for us as traders? Well, we need to observe what the market's doing. Okay, it's one thing looking at the odds and saying Trump's doing well, but just go and look at the real markets where there's real volume. And there's a number of those. We spoke about the Mexican peso being one. We spoke about the Chinese yuan being one. We spoke about Bitcoin being one. But another one to pay a very close attention to is the US Financials Index, and the index I'm using is the XLF. Ultimately, we can see that over the last 7 sessions, we can see the financial index is broken out. Okay, banks do stand to perform and do very, very well in a Trump environment. Of course, he's going to be very much relaxed on regulatory. He's going to cut taxes, and ultimately he's going to be a little bit more inflationary than a Kamala Harris, which means rates do stay higher and banks do pay a lot less tax in terms of what's expected. So the result is financials are doing very, very well. You can see we pretty much had a gap up into record territory and we've held that gap ever since. Okay, so the financial index is up 7% over the last 11 days. And keep in mind, this is at a time when the Fed is not only cutting, but they cut 50 basis points and could cut more. Okay, so typically in a cutting cycle, financials should not be rallying and breaking out to record highs. And this shows perhaps a degree of consensus around a Trump victory. So just keep a very, very close eye on that chart. And then finally bringing us to the play of the day, perhaps the play of the week. I think it's all about Euro Swiss. I think this is a pretty straightforward layup. It's a pretty straightforward setup. It's a market that wants to go down. It just wants another reason to continue the trend down. So keep a close eye on this. I suspect we get the break this week. Like I said, we started off with that very bad PPI today. We've got the German Bund curve steepening again. So I suspect the odds of a 50 basis point rate cut are going up pretty much day by day. Towards the back end of this week, we'll talk about some of the actual economic data coming, but I suspect come Thursday, Friday, this break would have already happened, and we should then be on our way towards 93 and perhaps moving even lower. Okay, the trend is very clear. Path of least resistance is to the downside. It's just now about getting that catalyst. Okay, let's then obviously talk about some of the key economic data this week. We've got very much a light calendar. Monday, Tuesday, Wednesday we get the Bank of Canada, and they are very much expected to maintain this dovish sort of rate cut cycle. But the real action for the markets generally starts on Thursday, where we get EU or the European countries coming out with their PMI data. Now, don't forget, it was last month where we got those really, really bad PMI prints from both France and Germany. So no doubt that trend is likely to continue. And if that is the case, Euro is in play. Okay, I showed you that Euro chart last last week. We'll talk a little bit about that later on this week. I suspect we get more of a drop this week in that euro, unless, of course, barring those PMI somehow miraculously print some beats to the upside. It does look as though euro weakness comes towards the back end of the week. Okay, we then, of course, have got Japan coming out with their CPI print on Friday before the Bank of Japan meeting next week. Finally, let's just talk a little bit about Israel and Iran. Of course, those tensions are there. Of course, we're still waiting for that strike, and the market is likely to react to that strike. As I mentioned, it all depends on the degree of the strike as to how the market responds. The algos will move up when that airspace is closed, when that strike comes, and then it comes down to what they strike ultimately. Okay, don't forget, there are pretty much everyone in the know knows exactly what's going to be strike, so it's not like we will be having advanced information when that strike comes out. So just be aware, the people in the know will know what the strike is and what the targets are. So keep in mind, if oil does start to fade, it is very much a confirmation that perhaps the strike is not one of those that requires retaliation from Iran. Okay, that's it for today. Of course, good luck out there. As we always say, go manage that risk, go make some money.